Almost a year ago, I published a video that discussed selling covered call options for the same stock that expired at increasing 1-week intervals. In that video, I compared the results from laddering the stock option expiration dates. Well, now fast forward to the present day and stop on this comment that I received from a viewer named Jason Harris. He writes, "Great video and nice explanation. But how about this one? Is it possible to use the same strategy but apply the ladder to the strike price?" Well, Jason, thanks for the question. And in this video, I'm going to discuss a recent set of trades that I made that are structured in the exact manner that you're asking for. I own shares of Chewy Incorporated, stock symbol CHWY, and I'd like to use these shares to sell covered calls. So this is a great opportunity for me to try out what you're talking about, Jason. So from inside of my account, you could see that I currently hold 300 shares with a cost basis of $66 per share. So what I'm planning to do is use these shares to sell covered calls, and I'll ladder the strike prices so that I can illustrate the variance in premium prices as well as stock appreciation. Some of you may be thinking, what do I mean by ladder the strike prices? So I'll take a few moments and explain. So I just showed you that I own 300 shares of Chewy Incorporated, symbol CHWY, and now my plan is to sell 3 separate covered call options using those shares. So I'll use 100 shares to sell the first covered call option with a 1-week expiration using a fixed strike price. Then I'll take the next 100 shares and I'll sell a second covered call, also with a 1-week expiration, but with a slightly higher strike price. And then I'll take the remaining 100 shares to sell a third covered call, again with a 1-week expiration, and I'll use an even higher strike price. And now if you use your imagination, you can almost visualize how each of the different stock options is resting on the rungs of a ladder. For each of these options, I'm going to be specifying a 1-week expiration, and where it's going to vary then is in the strike prices. So for the first covered call, I'm going to use a strike price of $66, which is the same as the cost basis. For the second covered call, I'll be using a strike price of $66.50, and for the third covered call, a strike price of $67. One comment or email I often get about this particular technique is someone asking me if I just randomly picked the strike prices to use. And the answer here is no. I have a worksheet that I use to evaluate the different strike prices and their various outcomes. This tool really makes it easy and simple for me so that I can compare the different strike prices in a fair and reasonable manner. Would you like to have a quick look at the tool? So let's take a look at the numbers. If I were to ladder the covered calls for stock symbol CHWY, let's go ahead and plug these numbers in here. So I have 300 shares, so I'm going to be selling 3 contracts. So for each column, I'm going to input one of the contracts. I'm going to select an expiration date that's 1 week out, so that'll be October 29th. And then my cost basis for each of these is the same. It's $66. And now for my strike prices, here's where I'm going to do my laddering. So the first one, I'll do $66. So I won't realize any price appreciation if this option contract gets exercised. Next, I'll do $66.50. And on the last option contract, I'm going to do $67. Now for the first option contract with the $66 strike price, it's currently paying $1.85 per share in premium. For the second option contract, it's currently paying $1.75 per share in premium. And for the third option contract, I can get $1.40 per share in premium. So now if we took at the price appreciation profit, for the first option contract, it's obviously going to be 0 because I selected a strike price that equals my cost basis. Next, I'll realize a $50 gain based on price appreciation for the second option contract. And on the last option contract, I'll realize a $100 gain from price appreciation. So now if we just look at the premium amounts alone for selling these 3 option contracts, I would receive $500 in premium payments for these 1-week option contracts. Now, if each of these option contracts were to be exercised, how much would I profit? That would be a total of $650 if on the expiration date, each of these option contracts becomes exercised. If you like this worksheet, this is my Picking Stocks for Option Analyzer tool. Perhaps you've seen me use it in some of my other videos, and I use it every time I option trade, whether I'm selling covered calls or selling cash secure puts. Now, if you're interested in seeing and learning more about it, I'll be hosting a live demonstration here on my YouTube channel coming up here in the near future. Find out how to get access to this worksheet and watch me demonstrate how to use it during my upcoming live stream webinar. Register today so that you get notified and I can send you the special link for free access to the webinar. Just visit my website, simpleoptiontrading.com/picking stocks for options. I described the strike price laddering strategy with you, and I also revealed to you my plans of how to implement it. Now let's take a look at my account history to find out if I was successful in structuring the option trades. Here's the transaction record from my account history for the first covered call. It's for stock symbol CHWY, and I sold this covered call with a $66 strike price and an expiration date of October 29th. Now from this transaction record, you can see that I submitted this order on October 25th. So this is a 1-week option trade. And this option contract was filled at 7:10 a.m. Pacific time. Now at the time of this recording, I was paid $1.85 per share as a premium. And when the option contract actually got filled, I received a premium payment of $185. That's great. I was able to sell the covered call option contract for the first ladder strategy. Here's an account record from my account history that's for the second ladder strategy. This is the one where the strike price is $66.50 per share. Now you can see this is for stock symbol CHWY with a $66.50 strike price and an expiration date of October 29th. Now I submitted this order on October 25th, and it was filled that morning at 7:19 a.m. Pacific time. Now when this option contract got filled, I received $1.75 per share in premium, and as a result, a total premium payment of $175 was deposited into my trading account. I'm making good progress. I just sold the second covered call for the strike price ladder strategy. Now I just have one more to go. Let's see if I can do it. Okay, here's the third and final covered call option contract I sold as the final piece of this ladder strategy. This covered call is for stock symbol CHWY with a $67 strike price and an expiration date of October 29th. Now I submitted this order on October 25th, so this again is a 1-week option contract, and it was filled later that morning at 7:14 a.m. Pacific time. Now when I sold this option contract, it was paying $1.40 per share in premium. And when the option contract actually got filled, I received a total premium payment of $140, which was deposited immediately into my trading account. I did it! I was able to sell the third and final covered call option contract for this ladder strategy. Man, I don't mind telling you, I feel a sense of accomplishment. I was able to sell the 3 covered call options following the strike price laddering strategy. Now, the option contracts are only 1 week long, and they'll be expiring on Friday of this week, October 29th. Now, currently, I've received a total of $500 in premium payments. Now, I'll manage the trade for the rest of the week, and we'll see where I end up. Also, note that I'm okay if my shares get assigned to the buyer, so I'm not really super motivated to close these options with a buy-to-close technique. If you like the information about my stock picks, then consider joining my Patreon, where I share exclusive videos of my stock picks every week that I'm going to be using for profitable trades. I also include my research notes, stock analysis, and trading strategies for every stock I pick to watch for that week. And of course, all my videos posted on my Patreon are ad-free. There's one last thing before I end this video. Now, making profits and generating an income from option trading is a great thing, but keep in mind that all gains made from trading are considered income and are subject to applicable tax considerations. So every month, I save a portion of the profits that I earned in order to pay for my federal and state taxes. So please consult with your CPA, licensed financial advisor, and or tax preparer regarding the tax liabilities for your unique situation. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.